You're watching Kelowna Now Live. I'm Jim Csek. I'm joined today by Ringo and Adam Mitchell of 360 Lending. They're mortgage brokers in Ontario, and we're here to talk about the problem Canadians are facing right now. How big is the problem?
Pretty significant. We deal with multiple people on a daily basis, and we are seeing a significant uptick in people struggling to make their mortgage payments.
Yeah, because like a lot of people did these variable rate mortgages at lower rates, and the rate was raised 19 times by the Bank of Canada, and now they're renewing their mortgages, and some of these payments are up, 60, 70, 80%?
Yeah, it's pretty drastic. As we were just discussing, the government essentially put the word out to all Canadians that they were going to keep rates really low. And as you said, it's basically 19-fold. And when these mortgages come up for maturity, it's very tough for them to make their payments.
Yeah, because Tiff Macklin said when the Bank of Canada rate was 0.25, he said that Canadians can rest assured and go ahead and get that mortgage. The Bank of Canada will not be raising interest rates into the foreseeable future. So, Canadians can feel confident in picking up that mortgage. And a lot of Canadians did. And a lot of Canadians got mortgages at variable rates because that's where they qualified. And, they wouldn't qualify at the higher rates. So a lot of traditional banks put people into variable rate mortgages.
We have seen a lot of homeowners been affected by this. And our issue with this is that the government has dealt with inflation before. They knew that inflation was high, and they knew that they were going to have to raise rates. So I'm not sure why they would put out that message, because they knew that with the interest rates going up, that the real estate prices are going to soften, and there are going to be a lot of people who will have issues making these payments.
I seen a story on another outlet, and it was a Scotia Bank. I'm not 100% sure on the bank again, but the person couldn't make their payments at the new payment rate, and so they gave the house back, and then the bank is suing them now for the $200,000 difference in the market value.
We're seeing variations of that story play out across Canada. It's not atypical for us to see clients who have bought during the COVID era or around that era, and then now their mortgage losing their entire life savings, and the banks have to go after their money.
Well, the banks aren't stepping in to provide any kind of assistance either.
Yeah, so I mean, a 19-fold increase is pretty high. And what a typical, if somebody was paying $2,000 a month at 1.75, and now they're at 5%, what's that difference in payments?
I can't tell you off the top of my head, but I can give you a personal example. I bought my home in around 2018, and I think I was locked in at just under 3%. I think it was in the mid-twos. And by the time I got my renewal from TD Bank, my renewal rate came in at around 6%, and my payment had increased by about $1,200, which represented about a 60% increase.
Yeah, so I mean, for a lot of people that are budgeting with inflation in groceries and gasoline and all those things, a lot of people don't have an extra $600, $1,200, $2,000 a month to meet these obligations.
Well, that's correct. And, really the reason behind the increase in rates is to slow down the demand for frivolous products. So as we understand why they did it, it really comes down to the messaging before they did it, as we discussed at the beginning, was they promised to keep rates super low. So people did break their existing first mortgages, locked in at those 1.8% variable rate mortgages, and then the messaging changed.
They even tried to sell the message that this will make homes cheaper. It's actually made homes more expensive, right? Even though the prices come down a little bit on homes, but the mortgage payment's gone up.
Correct. And then if we keep, the immigration flow the way it's projected to be, house prices are going to continue to rise.
The reason we reached out to you, you sent out a press release showing about 10 homeowners stating that many of them couldn't even get renewals from traditional banks. Maybe just talk a little bit about that.
Sorry, can you repeat that question?
So the reason that we reached out is you guys sent out a press release that stated, like, it had a bunch of homeowners on there saying that the traditional banks wouldn't even renew their mortgages because they couldn't afford those payments.
Yeah, so we essentially put out a press release, anonymous profiles of 5 different clients in different, locations, all had great jobs, great qualifications, good credit scores, and yet they were either not getting renewed or they were definitely getting turned down for refinancing with their banks, which they've had relationships with, for 5 to 10 plus years, and the banks just have no answers for them. And without a mortgage broker stepping in to help, a lot of these homeowners don't know who to turn to.
Right. So that's odd, though. Like you get a mortgage, say you get a 25-year amortization at a bank, like a 5-year term. And then come renewal time, most people think that they're obligated to renew. But this is basically saying they're not obligated to renew. They just at that point can decide not to carry your mortgage at that point.
They can. It's relatively rare, that scenario. What's more common is for them to get renewal paperwork with pricing that doesn't fit their budget. Right. And then they become, and essentially they don't have a choice. It's either sign it back and then struggle. I think really the message we want to put out there is there are other solutions. We're shocked at how often clients will call in desperate, and we kind of analyze their situation, go through their gross debt service ratios, their total debt service ratios, educate them, and then let them know there are solutions. Because as this is a major problem now, it's not going to be forever. So a lot of these people just need a Band-Aid solution, and that's what mortgage brokers can provide, is that Band-Aid to kind of get them over this hump so that when rates do start to decrease, more options become available to them.
So what are some of those solutions? Maybe just share a couple of those.
Well, typically in the mortgage world, you have the A banks, which we all know and love, the big 5. And if you don't qualify with them because either credit scores or total debt service ratios, you can slide over to the B space. And these are also federally regulated banks. They just take on a little more risk. They will take on higher TDS ratios and lower credit scores.
Will that mean a higher interest rate, though?
It does mean a higher interest rate, but it's a solution. At the end of the day, it's a solution, and we like to call it common sense lending, whereas the banks will use, especially if you're self-employed, a B bank will use your bank statements to really determine how much cash flow do you actually have. And if we can't squeeze you in with a B bank, then we can slide over to the C space, alternative lending, otherwise known as private lending. Sometimes has a bad stigma, but I'll let you know, they get a lot of people out of a lot of jams, and it is a short-term solution that provides a lot of value.
And like you're saying, that sometimes we just have to do a temporary solution until we can get lower rates and then get back into the traditional lending.
That's the name of the game. A lot of times it's the name of the game is increasing your borrower profile. So, if your credit score isn't tip top, if you're below a 680, let's look at consolidating your debts. Let's look at lowering, because once you consolidate credit cards from 19 to 20, 30%, and you consolidate them at a much lower rate, you can see payment savings. Once you see payment savings, your quality of life gets better and your credit score starts to increase. Once your borrower profile is improved, then we can explore taking it back to the A or the B space.
Some good news out there is that the Wall Street was expecting in the U.S. about a 7 rate cuts this year. I think they've trimmed that back down to 4 rate cuts. But this morning, the Bank of Canada came out, or the inflation rate came out this morning at 2.9 versus the expectation of 3.3. So that should allow the Bank of Canada to ease rates. I don't expect them to ease them very quickly. But I imagine, what I see is that perhaps maybe a rate decrease in the next one, like of a 0.25, but I think it'll be a slow coming down. Is there anything that you guys are seeing out there that would either agree with that or disagree?
We're seeing reports from all different sources, from the US, from Canada, even in the European Union, with different inflation progress. So it's hard to say what they're actually going to do. But what we do know is that even if even if Bank of Canada decides to cut rates, it's going to be a slow and gradual process, and there are going to be lots of homeowners that really don't have the time or the luxury to continue to wait for months and months on end without an answer.
I think it's a kind of a crisis for sure.
Yeah, I try not to predict myself. I try not to do too much predictions. I mean, I did learn something during COVID. I know enough to know that I don't know anything because, when COVID hit, I thought the economy was going to tank, and it did the complete opposite.
Yeah. Well, they juiced it.
Sorry?
They juiced it and caused this mess.
Yes.
Right.
And I do know that it's a very fine line with, the Bank of Canada decreasing rates, because there are a lot of, clients, borrowers on the sidelines, and if they decrease rates too soon, it will become a feeding frenzy once again and driving prices even higher. So It's going to be interesting to see how they do this, but it is a very fine line.
I know that Bank of China decreased their rates this morning on mortgage rates, so that was one of the banks that, and usually you can start to see this trend. I mean, most international banks have been on pause for a bit, and I do believe that we will start to see some decreasing, but like as you said, it'll likely be a gradual decrease where people are probably looking for more substantial relief than a gradual decrease, right? So
yeah. And I doubt, like I said, I try not to predict, but I doubt very highly that the rates will go back down to where they were.
Not anytime soon, probably, that's for sure. And then again, what you brought up the point of immigration with adding 1.5 million people, obviously an strained housing supply is going to just drive demand, right? So, and that's one thing they don't really talk about, that the amount of demand that drives for people. Well, obviously those people need homes or rentals or anything, right? And then also the corporate buying of residential homes too. That's a big factor too, right? So we're seeing that a lot in the U.S. for sure too, and some of it in Canada.
Yeah, that's all happening. I don't want to speculate too much on that. I don't have too much information on that, but yeah, that is what's being said out there.
So I guess like for you guys, the best thing people can do is reach out to mortgage brokers and that and see what options they have. I guess the more information you have, the better.
Yeah, that, and also do some personal auditing as well, just making sure that you create a budget and stick to it, especially over the next year or so where times are going to be a little tough. Just make sure that you stay within your budget and talk to a professional if you need it before the problem arises and becomes a problem that you can't handle.
Yeah, I think we have a few. Well, I know we have one of your clients lined up to talk about her situation. So we'll continue down this story path. Is there anything else you want to share right now? We are doing part 2 of Mortgage Meltdown in Canada. And today we have, or right now we have Tracy, a homeowner in Ontario that Ringo and Adam kind of like connected us with. Maybe Tracy, you can kind of share some of the issues that you're going through right now.
Yes, thanks so much. I'm a homeowner since 1995, and went through a divorce in 2009. Have been independent since then, working and also going to school to increase my employability, as I did not have a degree when I was married. And it's always been a bit of a struggle. The first time I had to buy my home, I did have to borrow the money from my parents, which is hard. But I managed to do it. I managed to get out of school, get a great job, and managed to get a mortgage on my own. And then we had, COVID, and both my adult children came to live with me. I live in a house where the values increased, I think doubled from the time that I bought the home. I bought the current home that I live in, I bought in 2016, and had renewed the mortgage. And because my jobs were back and forth in their contract, I'm a teacher, so it didn't really fall into any category that they have for me. And so I was really scared to try and negotiate any kind of better fee. So I would just renew my mortgage. And then finally, I got to the point this year when the mortgage rate increased so much that I wasn't making any payments on the the loan portion or the principal, and I could see all of the equity just dwindling away in my home, which is pretty much the only investment I have left. And I couldn't get anything from the bank. We couldn't even get a $15,000 loan for my son based on his car. I couldn't co-sign for him. And I, was really up against it. I need need my home, and I kept getting further and further in the hole. That's my story right now until, I reached out to, Ringo and his team, and they really did help me sort of navigate through this and offer me some hope, that I wouldn't have to now lose the biggest investment that I have in order just to get by. And then I don't know where my kids would go. If I sold the house, I don't know where I'd be able to afford to live with the three of them, or the two of them, sorry.
Right. So you were in the state where the mortgage interest increased and the principal was actually going up on the home. You were kind of underwater in the mortgage and actually going the wrong way.
Yep. Yep.
Oh.
Yep. And I have to say, there wasn't much warning from that. I would get letters saying, once you reach the trigger point, which I'd read up on trigger points and I kind of understood them.
Mm-hmm.
Once I reached that, you're going to have to maybe renegotiate how much, your monthly payments are going to be. But even for me, renegotiating that, my monthly payments would have gone up more than half. More than
50%
half.
increase. Yeah, 50% increase. Yeah.
Yeah.
And for a lot of people, that they just don't have that in their budgets.
No, I don't. Fortunately,
Yeah.
I do have some help from family, and I do have equity in the home. So now I still have equity. Whereas if I had just kept the way I was going, the equity would have been eaten up completely.
Yeah.
Yeah.
So what did the bank offer you? Did they offer you anything in any kind of solutions
Nothing.
at all? Just pay
Nothing.
more money?
Just pay more money.
Yeah.
There's nothing there for me. Any of the algorithms that they have don't include my type of job. Having someone like Ringo who can say, look, I know that your ratios don't include somebody who has this kind of income, but she's been paying her bills, since 1995. I've been never reneged on any mortgage
Right.
payment ever. And so that didn't count for anything,
Yeah.
right? It's just, but she doesn't meet the ratios. She doesn't meet the ratios. So in that case, I was really kind of up against it. Yeah. There was nothing they could do for me.
Did you ever imagine this was going to happen? Like when you did your last mortgage, that the interest rates would go up 19-fold and that you would be in a predicament as you're in right now?
No. When they started to go really low, I was suspicious of that, right? I never expected them to go to the point where they were basically zero, and never imagined and didn't use that. I just didn't say, okay, I'm going to capitalize on selling my house and getting something. I really didn't trust that, but I didn't expect that, I didn't expect that I would be in the trouble that I felt that I was getting into. Fortunately, I'm sort of rescued, but I'm concerned. I know there's probably a lot of people out there that just have no idea that they're going to be owing bigger mortgages, by the time this comes due.
Anything you want to add to that, Ringo or Adam?
Hey, Tracy. It's Ringo.
Hi, Ringo.
Hi. Not much to add. I just want to say that Tracy's situation was difficult. It was definitely difficult. She came to us, I believe, about 2 years ago. She had some debts that she wanted to consolidate, and we had helped her out with that. TD at that time had registered a mortgage in a way where it essentially blocked other institutions from being able to help through a collateral mortgage. And when her term had, matured and it was time to refinance and blend those mortgages together, luckily we were able to reach out to one of our lending partners, Home Trust, And they were willing to work with us because of the type of client that Tracy was. They saw her overall profile and they made an exception because they saw the fact that Tracy was a competent borrower and she was someone who was willing to fulfill her obligations as a homeowner. And that's something that the major banks just aren't doing, or they're not capable of doing because of their policies. So Tracy, I would say, is a success story because she was able to speak to a professional in the industry, speak to a broker, and able to get help. And a lot of Canadians, other Canadians should, take a look at her example and also try to do the same thing if they're stuck in a situation where they feel like they have no hope.
You sound like a typical Canadian that's trying to do everything right, though. You're trying to better yourself at school, trying to get an extra, you're working 2 jobs. Like, I don't know what else more you can do.
We laugh. Ringo and I used to laugh at that because he'd say, okay, the bank just wants to know, can you, is there any other income? And I'd be like, what? How many hours in the day are there? I don't know what else to do. And we would both laugh. But I think Ringo touched on 2 points that I think are not transparent enough with the banks. One is the type of mortgage that they did have for me is that I was only utilizing I think they had something like a $600,000 mortgage out, and the way they had made it, I don't understand a lot of that. I understood the way Ringo explained it to me. It was sort of like they sort of told me when they gave me the mortgage, and it's like, but you won't need to worry about that. You won't need to worry about that, expecting that I would never have to renew or want to renew with anybody else but them. That was one thing where I didn't feel that they were very transparent, and the other is. Just that their policies are not set up. They're just not set up to seem to be able to help the average person, Yeah.
I'd like to, just kind of elaborate on what Tracy was saying. Hi, Tracy. My name's Adam. I work with Ringo. Hi. She's referring to a collateral charge mortgage, where basically if the home's worth $1 million, the mortgage, the actual mortgage that you make payments on is say $500,000. What a lot of the banks will do is they'll register a mortgage on the property of up to $1 million, so the full value of your home. So you can't go anywhere else. If you approach another institution, it shows that you have $1 million mortgage when in fact it's only $500,000.
That's pretty nasty.
It is, and it's becoming quite common. It's been happening for almost 10 years, and more banks are doing it now. The other thing I want to kind of touch base on is, Ringo's solution and finding Home Trust and willing to work with them because, and Home Trust is considered a B bank and they're the largest B bank in Canada. They take a very common sense lending approach, whereas a lot of the other banks that we all know and love, it's black and white. Whereas if we can really analyze the situation, look at the story, explain the story and make it make sense, then they can often provide a solution.
Well, I'm glad to hear, Tracy, that you found a path forward and a bit of a solution, and hopefully things improve even more. But and good luck in your school and all that stuff. And we'd love to check back with you at some later point too. But I mean, I thank you for sharing your story because I think a lot of Canadians need to know they're not alone in this, and that there are ways that they can do it. And I think part of that is just having discussions with people, professionals, and seeing what their options are. I think options are always a good thing, right? Like, what are my options? I must have options other than somebody telling you, nope, that's just the way it is. And
I'm sorry, I just want to throw that in there that, I'm lucky in that I have a good awareness of brokerages and brokers, and that I don't have that fear that's been instilled with people when they go into a bank that a broker is like someone who's going to rip you off, and they're not supported by banks, and I think there's a really bad rep out there for brokers, and that is something I think that what you're doing and with good media and good education can really help people, is that there are solutions out there that you don't have to just take no. Right? There are people that are out there like Ringo and Adam who can help you.
I think what people can take from that is no doesn't mean no. No means they need to ask somebody else. Yeah. Right? Do you know what I mean? Like, I think that's the big thing when somebody tells you no, just like, oh, thank you for your response, but I'll be moving on now, right? Because there is options, always there's options, right? So again, thank you for sharing your story. And thank you again, Adam and Ringo. And you've been watching Kelowna Now.